everybody. It is Monday, the 27th of November. I am your host, Chuck Fulkerson, and welcome to today's edition of the Daily Market Commentary. This is the post-Thanksgiving edition, as I have finally woken up from my tryptophan turkey-induced coma. And the turkey-induced coma wasn't so bad, but it was the sweet potatoes that really was the knockout blow. Hope everybody had a great holiday weekend. In the U.S., it was a holiday, and I did not do a daily market commentary on Thursday or Friday, for that matter, as I spent the time cutting down a Christmas tree. It's nothing like being in Texas, cutting down a Christmas tree in a flop sweat. So for those of you that are new to the channel, welcome. Glad you were able to join us. The daily market commentaries, looking at the market every day, and I try to look at it right around the close to look at what happened during the day. We also look at potential trades that may happen in the future, but the key here is we leave the lines on the charts. And the reason that we leave the lines on the charts is very simple, that we want these trades to be as accurate as we can, so that as people look at them, what they see is, what you see is what you get, and win, lose, or draw, we kind of leave it there. So let's go ahead and get rolling. So our first market we're going to look at is the S&P. Now the S&P, though I didn't do a daily market commentary on Thursday or Friday, we can see that this was the level that we had established on Wednesday before we had shut it down for the Thanksgiving holiday and said, well, if price reaches into here, you may have a level set up and a trade ready to go. And indeed, price came down into this region. Now, this is a purple line. So what does purple line mean? Purple lines are levels that we find on smaller time frame areas. Now, the reason that we had selected this is because it's the origin of a very strong move in price, which was a fair price area. Here's where we believe that the market had a fair price, and then we rallied up from there. And then what I liked was that we tried to get back into there, but kind of chopped around a while during the really slow market period. Came back down into it in the right around the London Open, and then have traded up from that level ever since. So it's been about a 10-point move since that area. If you are in this one and you're still in it, I would be moving my stop up to probably below this pivot low right here. Reason being is that even though we're continuing to get higher swing highs, my higher swing highs are getting closer to one another, which means that my momentum is waning. I'm seeing waning momentum, not just in this, but also in a lot of individual securities. So if you go ahead and, if you look at individual securities, you will see that there is a fair amount of momentum that's getting weaker in some of these individual securities. So kind of keep an eye on that. And that's what I'm seeing in the S&P. So I think I could see things really starting to follow suit and drop down just a bit, kind of from that area. So there's our S&P. Now, where do I see as a potential kind of new setup? Well, I've got to remove this. This one is no longer valid. We're not going to look at this level any longer. I don't really want to use this one going further. I believe that we've probably used up most of the juice in that region. So what I'm going to do is look to see a bit lower. And as we look a bit lower, I could come down into this region here, which is this is where we had that reversal off the smaller time period chart. I'm going to go to a 60-minute or 1 hour. My 1 hour chart is kind of my base chart. It's the one that I like to stick to for the most part. And I've got to come all the way down to here before I find something that really gives me a good level of interest. And that's a decent little retracement from where we are. So that would pull us down to about 25 points in the S&P before we would get to there. So it would, in my mind, take about a 25% retracement before this thing gets buyable. Again, not that it's not buyable now, because I don't feel like it's shortable at all. There's no way I'm shorting this thing up here. There's no levels for me to look to short it. The NASDAQ. So the NASDAQ, if you can see by this blue line, anytime we have a blue line, it means that we're trading the breakout. So, the breakout occurred right here, which means your stop goes below the prior pivot low, which means that even though price came back down to it once, came back down to it twice, you never really got below this pivot low. It's actually this pivot low right here, which occurred right before the breakout. So there's no reason why you shouldn't still be in this thing. That being said, once again, momentum fairly weak. So I'm going to remove this right now. I am, however, going to put a new breakout long trade in place. And The breakouts are most effective when we see a number that's been hit on more than one occasion. So this 64.24 half, there's a psychological probably resistance point there at 64.25 that's stopping it from getting above there. But once it does, I think there's plenty of room for it to continue to run. Crude oil. So crude oil, we see a little bit of a drop down. I was actually on the phone with a friend earlier today, when we talked about a potential rollover in crude, as I thought it was going to get a little bit weaker off of this region here. I can't leave that though. I can't take credit for something that I didn't put out there ahead of time. But I did believe that this was going to be a little rollover point, and I think that it's going to continue to go until about here, 57.18 range. That being said, we can't use that. I think there's still room if you want to run with it a little bit, but I do believe that this is a better spot. So I think right in here is a pretty good spot, and the reason for that is because of this wick right here, which think about it like a knife kind of piercing through any of the existing orders that were there in the past, and now it's come back down, based in there, was able to accumulate more potential buying, and boom, shot up from that fair price region. And there could be another. This could be where you want to get long again when price comes back down into it. Looking at that on a daily, that's really just a nice little pullback on the daily into a region that I think is pretty acceptable. Next, gold. So earlier today, I had posted a tweet. Now, for those of you that don't follow the Twitter feed, one of the things that I try to do is I try to put a tweet out there every day of whenever we see things move or whenever we see things change. So earlier today, I had put out this tweet. It says, GC level not looking so hot from last week's DMC. Maybe time to take a little off the table and move on, was really what I had put out there. Well, let's look at it. So this was the level that we had set up. Now, this is a confirmation style of an entry, meaning we want price to come into here and then go out and to confirm that it's going to work. So when I had posted that tweet, we were sitting right about here, and price had kind of come back, not quite to where our entry point would be, but in that range. And it's kind of just still chopping along. So it is still working out, but it's working out very slowly. You've got to be comfortable being on the waiting side. That being said, I do like this area down here. I had plenty of time today to really look and examine some opportunities, and this one I found today to be to my likings. Right down in here, 1282.3 by 1284. In that range, I think there is a good potential for a reversal as price comes back down into there, if indeed that it does. All right, let's take a look at some of our other markets. Bond, Aussie, and the Euro and the Canadian. So bond markets, once again, not a whole heck of a lot going on. We got the switch with the big gap down right here on the weekend closure, but that gap has just about been filled. We may get a little bit of a reversal off of this gap. Sometimes you play the gap and go. This was not a case to play the gap and go because it gapped down right into an area of support and bounced up off that support pretty hard. I'm still going to leave it be. There's potential to get short on this this refill of this gap. So those of you that are watching this, if you like that, there is going to be a slight potential there. Move that down to a 15-minute chat, as they would say in Boston, a 15-minute chat. That's a wicked. Keep hitting the wrong buttons. Activate drawing. There we go. There we go. So on a 15-minute time period, 295 by 310 right in through here would be your potential entry point for a small time frame short off of this region. All in all, when we look at the bonds on a daily time period, we see that it's really just a tightening range, and this is tough sledding. This is hard trading to do. So though I put it on there, for those of you that are interested in it, it's a little bit higher risk. I will tell you, I'm not taking it. Doesn't fit my overall risk tolerances. I put it on there for those of you that it might fit. but we're leaving the lines off. Let's take a look at the Aussie. So the Aussie dollar, we had a very, very, very strong picture of a level set up right in here, and price did what I like to call nicked by a tick. We almost got in, almost got filled, and only to see it move the way we thought it was going to move anyway. Ugh. We've all had this happen. Anybody who tells you they haven't had it happen is lying through their teeth. We've all had this happen. We just missed entry by just a smidge. So that has actually made me a little bit more weak on the area itself. I'm going to change it to a confirmation style entry with a very, very tight stop parameters. But the level's still valid. It still holds, and it's still worth looking at. But it, would have made our entry and hit our profit target, so we'll let it go for now. Next would be the euro. Now, the euro did not meet entry. Why did it not meet entry? We'll take a look about what happened. So this is a dashed line. This is why we use the dashed lines. Price came into the euro, came in, broke it, started to come out, broke it, hasn't come out, broke it. So though price has come down from this level, we would not be in this trade if we're following the rules. Remember, follow the plan. This one's not going to fit our parameters for risk. We've got to remove it. It's no longer valid in its current state, but we do still have this area here. In the meantime, what we've put in is this potential entry down from here. Now, the thing that I like more about this is that this old resistance over on the left, right there, can help act as new support right above all of this noise right in through here. So there's our areas in the euro. Aussie. The Aussie, we came close, and we couldn't get it done. Didn't quite get to the breakout point yet. That breakout is still valid. Did like this reversal off of here. Wasn't able to get the trade on today. Is this little rally, this base, and this very strong move down. And that fair price base is an area, that occurred right early morning. And it did right on the holidays. So I really wasn't paying too much attention to it. But the breakout levels are still applicable. Nat gas has continued to show weakness. And I will tell you, the Nat gas, we finally got our breakdown. And then over the weekend, we gapped up through it. So we got the breakdown out of it. If you don't hold trades over the weekend, then you close it out for a bit of a profit. If you do hold trades over the weekend, sorry. Definitely you should be stopped out right at the open, as your stop would have been above this prior pivot high. If you close it out before the weekend, which for futures I prefer to close it out over the weekends, but that's just mostly because I'm very, very, very risk averse. But that's completely up to you and your particular style. So Nat gas, nice little move off of that area. Going forward, I'm not ready to put a line on it yet, but I'm going to put a circle just to remind myself to keep looking in this region. I think depending on how we arrive, we could get a little bit of a reversal out of this range right here. We are coming close to the 3, the whole round number, so that psychological number is going to play a part. Great British Pound, once again, nicked by a tick, did not yet get in. So much like we did with the Aussie, we have to change our style from solid line to a dashed line, simply because I want it to show me that it's going to work. You got to prove it to me, and then I'll be in. And once again, managing that stop very, very tightly. And then the Japanese yen, we did not come anywhere near our Japanese yen entry point. It is still there staring at us. Looking at it on the daily, I got nothing above me yet that tells me it's time to look to get short. You've got this little gap area right in here, which we are definitely approaching. And we've got, there it is, right up in here. So a little bit of this area in here. So we're going to get something up in this range, but I think we got some time before we get there. So that being said, that is our session for today. I hope everybody had a very, very good session. I know I ran a little bit longer today than I usually do. Do me a favor, if you don't already, subscribe to the channel, like the channel, share the channel. If you have questions, feel free to email me, chuck@iiefinancial.com. And if there's something I can ever do to help you, or if you've got a friend or relative that's looking for an advisor, give me a shout out. Chuck@iiefinancial.com. Hope you guys are all having a great day, and I will talk to you soon.